Hey everyone, welcome back to Corporate Decoder, the place where we dissect the intricate world of business and uncover the hidden stories within corporate filings. Get ready, because today we are diving into major news from a giant in the pharmaceutical world. PFIZER Inc., and let me tell you, they have been busy issuing some serious debt to fund who knows what, maybe future acquis. Issuance, or maybe just to keep the lights on with rising healthcare costs and looming patent cliffs. It is always a balancing act for these companies, and we are going to unpack exactly what this filing means for them and for you. This is a current report from PFIZER filed on the 21st of November 2025. So things are fresh. This report is basically PFIZER saying, hey world, we just closed a massive public offering of new debt. We are talking hundreds of millions, if not billions of dollars in new financial obligations. Let's break down these new notes. PFIZER has issued a whole bunch of them. First up, we have $500 million worth of floating rate notes that mature in 2027. Essentially, these are loans where the interest rate can change over time based on market conditions. So if interest rates go up, PFIZER will pay more, and if they go down, they will pay less. Then there are $1 billion of 3.875% notes due in 2027. That means for every $1,000 they borrowed, they will pay $38.75 in interest per year, fixed for these specific notes. Next, a whopping $1 billion of 4.200% notes due in 2030. These are a bit longer term and come with their own fixed interest rate. And look at this $1.25 billion of 4.500% notes due in 2032. That is a substantial amount of money borrowed for a longer period. They are also issuing another $1.25 billion of 4.875% notes due in 2035. This is the longest maturity we have seen so far, extending into the future. And not to forget $500 million of 5.600% notes due way out in 2055. That is a 30-year loan. Imagine what the world will be like then. Finally, another $500 million of 5.700% notes due all the way in 2065. These are incredibly long-dated debts, essentially locking in borrowing costs for over 40 years. So why is PFIZER doing all this borrowing? Well, this offering was made using a so-called shelf registration statement. This basically means they had pre-approved permission from the US Securities and Exchange Commission to sell up to a certain amount of securities over time, and they are now utilizing that framework to raise these funds. The actual borrowing agreements are governed by an indenture. This is a legal document that lays out all the terms and conditions of the debt. That means it covers how much interest is paid when it is paid, and what happens if PFIZER doesn't meet its obligations. This particular set of borrowings is covered by a sixth supplemental indenture. This is an addendum or amendment to an existing master agreement detailing the specifics of this new debt issuance. Here we see the actual templates or forms of these notes. They are presenting what each of these debt instruments will look like, and what specific terms will apply to them, each note type from the floating rate to the longest dated ones. All have their own specific forms filed here. Now this is where the deal gets done. PFIZER didn't just sell these notes directly to investors. They worked with a group of underwriters. These are investment banks like Citigroup, Deutsche Bank, and JP Morgan, who agree to buy the notes from PFIZER and then resell them to the public, all for a fee. This underwriting agreement is the contract outlining their roles and responsibilities. The pricing agreement is a companion to the underwriting agreement. This is where they nail down the exact price and interest rates for each series of notes that we talked about earlier. It confirms all those figures we discussed. Now let's look at the exhibits. Basically, these are the supporting documents for this filing. The underwriters agreement, the pricing agreement, the various indentures, and crucially the legal opinions confirming the validity of all these new debts. This exhibit contains a legal opinion from PFIZER's own internal counsel, Margaret M. Madden. It is essentially a formal statement from PFIZER saying that all these notes are legally valid and properly issued. This adds a layer of assurance for the investors buying these bonds. And along with that opinion comes a consent. This means that Margaret M. Madden agrees to be named in the filing as providing that legal opinion, allowing it to be used by the SEC overall analysis. So what does all this borrowing mean for PFIZER? It is a bit of a mixed bag. On one hand, PFIZER is demonstrating its ability to access significant capital markets. This is a sign of strength. And con, Phi, dense from investors in the company's future prospects. They are clearly looking to finance something substantial, whether it is research and development, new acquisitions, or shoring up their balance sheet against potential future economic headwinds. On the other hand, a company taking on this much debt needs to be managed very carefully, particularly with these longer maturities. Does PFIZER have a solid plan to generate enough cash flow to service all these new interest payments and eventually repay the principal? We have seen in the past that companies can get into trouble by over-leveraging themselves, even giants like PFIZER. The specific interest rates, while perhaps reasonable in today's market, are still fixed costs that will weigh on their earnings for decades, particularly those notes extending out to 2055 and 2065. PFIZER needs to end. Sue, REIT's core business continues to generate strong profits and free cash flow to manage this debt burden. It will be interesting to see how they deploy these funds, and if those investments will yield returns that justify the current borrowing costs the company's long-term strategy, and its ability to adapt to a rapidly changing healthcare landscape will be crit. Equal. In managing this newly acquired debt, alright, that is our deep dive into PFIZER's latest debt issuance. What is your take on this massive borrowing operation, and what do you think they are planning to do with all that cash? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more undiluted financial insight. Gates, and don't forget to join our Discord community linked in the description for more discussions and behind the scenes content. Thanks for watching, and we will see you in the next one.